Starting a rental property business in South Africa is one of the smartest ways to build long-term wealth. With a rapidly growing urban population and a residential property market valued at over 5 trillion rand, the demand for rental housing has never been higher. Every month, thousands of people move to cities in search of work and education, creating a continuous need for rental accommodation. If you've ever considered investing in real estate but weren't sure where to start, this video will guide you through the entire process. You'll learn how to find the right properties, secure financing with just a 10% deposit, attract tenants, and maximize your rental income. We'll also break down how to ensure your properties pay for themselves, so you can grow your portfolio without draining your savings. But here's something most people don't realize. You don't need to be rich to get started. With the right strategy, you can leverage other people's money to build a rental property empire. Want to know how? Keep watching, because by the end of this video, you'll have a clear roadmap to making money with rental properties in South Africa. Before we dive in, hit the like button and subscribe to our channel for more business and investment insights. And if you're serious about property investing, visit our website bizbolts.co.za to download a detailed rental property business plan to guide you step by step. Now, let's get started. When it comes to investing in rental properties in South Africa, there are plenty of opportunities to choose from, each with its own advantages. The key is understanding which type of property aligns with your investment goals and the market demand in your target area. Apartments in major cities like Johannesburg, Cape Town, and Durban are always in high demand, especially in bustling areas near business hubs and universities. These properties tend to attract young professionals and students looking for convenience, making them a solid choice for consistent rental income. Freestanding houses offer another attractive option, particularly in suburban areas where families are looking for long-term rentals. These properties often come with higher rental rates, and because tenants tend to stay longer, landlords enjoy lower turnover and fewer vacancies. Additionally, sectional title units, such as townhouses and duplexes, strike a balance between affordability and rental demand. They are popular among young families and professionals who want security and access to shared amenities without the maintenance of a standalone house. For investors looking to tap into a more specialized market, student accommodation presents a lucrative opportunity. With major universities across South Africa constantly attracting students from all over, well-located rental properties near campuses can generate high returns. The same goes for short-term rentals like Airbnb, which thrive in tourist hotspots and business districts, offering flexibility and potentially higher earnings than traditional long-term rentals. Finding the right rental property to buy is the key to building a profitable real estate business in South Africa. The best place to start is online property portals like Property24 and Private Property, where thousands of listings let you track pricing trends and spot high-demand areas. But smart investors don't just rely on listings. They work with experienced real estate agents who have access to exclusive deals before they hit the market. Agents from top firms like Remax, Seif, and Pam Golding can help you find rental properties that attract tenants and appreciate in value. For those looking for bargains, property auctions offer below-market prices on bank repossessions and distressed sales, but they require careful research to avoid hidden costs. Networking with other investors can also unlock off-market deals and valuable insights, giving you an edge over the competition. Location is everything. A rental property near universities, business hubs, and transport links will attract tenants faster and generate higher returns. Researching rental trends and upcoming developments can help you find properties with strong long-term potential. Funding your rental property investment doesn't require millions in the bank. In fact, with a home loan from a bank, you can finance up to 90% of the property's purchase price, meaning you only need to put down a 10% deposit. If you're eyeing a 500,000 rand property, that's just 50,000 rand up front, making property investment more accessible than most people realize. But the deposit isn't the only cost to consider. You'll also need to budget for transfer fees and bond registration costs, which vary depending on the property price. These are once-off costs, but they're essential for legally securing your investment. If you buy a property for 500,000 rand, expect to pay around 45,000 rand in transfer and bond registration costs. One of the biggest advantages of using a mortgage bond is leverage. Instead of saving for years to buy a property in cash, you can own a high-value asset now while using the bank's money to fund most of it. The repayments are spread over 20 to 30 years, making it easier to manage your cash flow. Even better, the interest on your mortgage bond is tax-deductible, reducing your taxable income and putting more money back in your pocket. If your monthly mortgage payment is around 7,000 Rand, but your rental income is 9,000 Rand, you're not only covering your bond, but also making a monthly profit. This is how smart investors build wealth, using other people's money to grow their property portfolios while earning passive income. Once you've secured your rental property, the next step is finding tenants. A good rental property naturally attracts tenants. If your property is struggling to get interest, take a step back and assess its condition. Would you want to live there? If the walls are peeling, the kitchen is outdated, or the bathroom needs repairs, investing in renovations can make all the difference. Tenants are willing to pay more for a well-maintained property, and a fresh coat of paint, modern fixtures, and simple upgrades can significantly increase demand. Don't take shortcuts. Rushing to rent out a property in poor condition will only lead to tenant dissatisfaction and high turnover. Ensure you always sign a lease agreement with your tenants. This protects both you and them by outlining rental terms, deposit requirements, and responsibilities. A verbal agreement might seem easier, but without a signed lease, you have no legal protection if things go wrong. Finding tenants is easy when your property is in good condition and in a good location. Listed on private property, Property 24, and Gumtree, where thousands of renters are searching daily. Use social media platforms like Facebook and WhatsApp to reach an even wider audience. Don't overlook traditional methods like placing a "for rent" sign outside the property. If you want to avoid the hassle of tenant screening and rent collection, a property management company can handle everything for you, ensuring your property stays occupied while you enjoy stress-free rental income. Owning rental properties isn't just about collecting rent. It's about building wealth, generating passive income, and securing your financial future. There are several ways to make money with rental properties in South Africa, and if you play your cards right, your investments can work for you long-term. The most obvious way to make money is rental income. A good rental property provides a steady stream of monthly income, but setting the right rental rate is crucial. If you price it too high, you risk long vacancies. If it's too low, you leave money on the table. Research rental prices in your area, analyze what similar properties are charging, and price yours competitively. Keeping your property well-maintained and offering desirable features like secure parking or modern finishes can also justify higher rental rates. Beyond rental income, property appreciation is another way to grow your wealth. Property values in South Africa tend to rise over time, especially in areas with strong economic growth, infrastructure development, and high demand. A property you buy today for 1 million Rand could be worth 1.5 million Rand in a few years, simply due to market trends. If you decide to sell, you can walk away with a significant profit. Alternatively, appreciation allows you to increase rental rates, further boosting your income. The key is investing in areas with strong long-term growth potential, such as locations near thriving commercial districts, tourism hotspots, major shopping centers, and universities. The most financially rewarding rental properties are cash flow positive properties, those where your rental income covers all your expenses, including bond repayments, levies, maintenance, insurance, and property management fees. If your total monthly expenses, including bond repayment, add up to 8,000 Rand, and your rental income is 10,000 Rand, you're earning 2,000 Rand in profit each month, while your tenant essentially pays off your bond. You can calculate whether a property is cash flow positive by subtracting all costs from your expected rental income. If the number is positive, it means the property is generating pure profit every month. But what if a property isn't cash flow positive from day one? Does that mean it's a bad investment? Not necessarily. Many investors buy properties where rental income only covers part of the mortgage bond. While this means you may need to contribute to monthly payments, you're still benefiting in two major ways. First, your tenant is helping you pay off your bond, reducing the amount you owe on the property over time. Second, as the property appreciates in value, You can sell it at a higher price in the future, making a significant return on investment. Even if a property isn't generating monthly profit now, it can still create long-term wealth through capital appreciation. The best rental property investments combine strong rental income, consistent appreciation, and strategic financing. Whether your goal is monthly cash flow, long-term value growth, or both, rental properties remain one of the most powerful ways to build financial freedom in South Africa. Managing a rental property in South Africa isn't just about collecting rent. It's about keeping everything running smoothly so your investment stays profitable. The key is making sure your property is well maintained, tenants are happy, and any issues are handled quickly. A well-managed property means fewer vacancies, fewer headaches, and more money in your pocket. You can either manage the property yourself or hire a property management company. Self-management gives you full control and saves you money on management fees, but it also requires time, effort, and a strong understanding of tenant relations. You'll need to market your property, screen tenants, handle lease agreements, collect rent, and oversee maintenance. If you're up for the challenge, self-management can be rewarding and help you maximize profits. If you'd rather take a hands-off approach, a property management company can handle everything for you, from finding tenants to handling repairs and making sure rent is paid on time. This is a great option if you own multiple properties or don't have time to manage things yourself, though it does come at a cost, usually a percentage of the rental income. No matter which route you choose, knowing South African rental laws is a must. The Rental Housing Act and other regulations are there to protect both you and your tenants, and staying compliant helps you avoid legal trouble. At the end of the day, good management is what turns a rental property into a stress-free, income-generating asset. Get it right, and your rental business will practically run itself. Rental properties are not just an investment, they are a legacy. Unlike some businesses that can disappear over time, real estate is a tangible asset that retains its value and grows across generations. When you invest in rental properties today, you're not just securing your own financial future. You're creating a wealth-building machine that can benefit your children and grandchildren for decades to come. One of the biggest advantages of rental properties is that they generate passive income that continues even after you stop working. With the right strategy, your properties can pay for themselves, build equity, and increase in value over time. As you acquire more properties, your rental income grows, providing long-term financial security not just for you, but for future generations. Real estate is also an inflation-proof asset. While money loses value over time, property values tend to rise, ensuring that your wealth keeps growing. By holding onto properties and passing them down to your children, you're giving them a financial head start, a foundation that allows them to build upon your success rather than starting from scratch. The key to generational wealth is thinking beyond short-term profits and focusing on long-term stability and growth. By diversifying your rental portfolio and reinvesting profits, you can create a family-owned real estate empire that provides income, security, and opportunities for generations to come. Start today, and your future family will thank you. With the growing demand for housing, accessible financing options, and the potential for both rental income and property appreciation, investing in real estate is one of the smartest financial moves you can make. But success doesn't happen by chance. It takes the right strategy, smart property selection, and careful financial planning to make sure your investment works for you. By now, you've learned how to acquire rental properties, fund your investment with just a 10% deposit, find tenants, and manage your property like a pro. The next step is taking action. Whether you're buying your first rental property or looking to scale your portfolio, having a solid business plan is key. That's why we've put together a detailed rental property business plan that includes step-by-step guidance and financial projections to help you make informed decisions. It even comes with a cash flow calculator that automatically determines whether a property will be cash flow positive, an essential tool for any serious investor. So if you're ready to turn your property investment dreams into reality, visit bizbolts.co.za and download your business plan today. Don't forget to subscribe for more valuable business and investment content. Now, we'd love to hear from you. What type of rental property do you think is the best investment in South Africa? Apartments, houses, or student rentals? Comment below and share your thoughts.